Hello, everyone. Today, I want to talk about one of the most famous investors in the world today. His name is Warren Buffett. And you may know the name, but you also may realize that he just turned 90 years old August this year. And so I want to talk about his investing advice and his investing strategies and give you some tips on how he has become one of the wealthiest people in the world. His current wealth is $82 billion, if you can believe that. But let's jump right in to the tips that he talks about. Here are 5 wealth building tips that Warren Buffett would recommend for you. Number 1, invest in yourself. This means that it's important to focus on your own education, making lifelong learning part of your overall makeup in your daily habits. Reading books, buying books for yourself, going to seminars, watching YouTube videos, attending classes, what you can to build your value, whether it's in your career, whatever you're doing to build your value for your business. It's important to invest in yourself and use your money to improve your value in the marketplace. By having more skills, you become more valuable to whoever you may be working for and to your clients or your customers in your own business. Tip number 2 from Warren Buffett: you have to be rational and not emotional when it comes to money. Very easy to say. When things are going well, we sometimes think we're a genius, and our emotions can get away from us on the positive upside. Now, when things go wrong, we can become discouraged and give up and quit. And so maintaining these emotions is one of the key elements and factors of investing. And we talk about this a lot in this channel, how that having an investing process will help you stay on track when your emotions are pulling you in crazy directions. When it comes to investing, you have to let knowledge and math and statistics be your guide instead of your emotions, watching the news and getting excited or depressed based on what they're saying. But math and statistics will help you, and very, very important. And to Warren Buffett, he's a math genius. If you've ever watched him or heard him calculate numbers in his head, he's quite remarkable, even at 90 years old. It doesn't mean you have to be like that yourself, but it is important to have people around you that are good with numbers, good with math and statistics. Prices are going to go up and down. Markets are going to go up and down. And it's important to avoid the emotion, and that's what can take you completely off track. All right, number 3 from Warren Buffett: know what investments are right for you. What we mean by this is that some people like picking stocks. They like spending time picking stocks. Here at Clarion Advisors, we typically don't pick stocks, but we use mutual funds and exchange traded funds. We have clients that love real estate. They love to invest in real estate. But you have to realize what your gift in. So you got the stock market, you got the bond market, you got the commodity market, you got the real estate market, whether it's commercial or residential. You have businesses. A lot of people invest in businesses. That's their gift. They understand a certain niche and they can do very well investing in that area. So if you are not the type to invest in stocks, if you're not confident about finding the next hot stock, index is a great way to go about this. And Warren Buffett recommends an index fund. Index fund is basically a collection of stocks or bonds. The most well-known, most famous index fund is the S&P 500. And that's the 500 largest stocks in the US stock market. Now, there are bond index funds, there's commodity index funds, there's index funds nowadays for about every market in the world you could participate in. But Warren Buffett recommends for most people that don't want to spend their life dedicated to investing is to use index funds. All right, so number 4, Warren Buffett's suggestion for building wealth: think long term, okay? Think long term. A lot of people come to me and they want to get rich quick. They want a year or two and they want to hit it, and that is not what we recommend at Clarion Advisors, and it's not what Warren Buffett recommends. So here are a couple of statistics. Warren Buffett just turned 90 years old. 95% of his wealth came after he turned 65. He's been investing his entire life. He was born in 1930. And so 1950, he was 20. Think about that. Think about that investing career. That is really long term. Between 1930 and 1995, he was 65. So 95% of his wealth came after he was 65. That's what we're talking about with a long-term perspective. So even if you're in retirement in your 60s, there's a good probability, there's a good chance that you have a long time horizon to build wealth and create a legacy, to create an estate for those you love and those that you care about. One of the things that's going on nowadays is we have a lot of day traders, people that are playing in the market because of lockdowns and being at home. And so the numbers are showing an amazing volume of trading, short-term trading. That is not the best strategy for most people to be successful investing. If you think of Warren Buffett, he buys things for the long term. One of the reasons he is so wealthy is because he rarely sells anything. And because he doesn't sell anything, he never incurs taxes. That's one of the key secrets of his wealth, that he never pays capital gains tax because he never sells anything. You think of the investment he has in the companies he owns, he's held them for decades. Okay, number 5, tip from Warren Buffett: money is not everything. It's important to realize that money is a tool. It's a vehicle that you can use to take you somewhere. It's not an end in itself. And so it's important to keep money in the right perspective. As an advisor, we see people when they first come to us, they're very nervous and anxious about money. And so what we help them do is put money in the right perspective, where it can take care of them and grow and be a benefit to their life, but not overwhelm them with fear and emotion. So money is not everything. There are a lot more important things to be doing in life. If that's not your gift, find an advisor that you trust, that you like to work with, to help you work through these issues related to money. So there you have it, the 5 tips from Warren Buffett about becoming wealthy and staying wealthy. Number 1, invest in yourself. Number 2, you have to be rational and not emotional. Number 3, know what investments are right for you. Number 4, think long term. And number 5, money is not everything. So 5 tips from Warren Buffett that will help you. So thank you for stopping by. We so appreciate you visiting the channel here. If you would subscribe, hit the bell for notifications in future videos, and we will continue to educate and talk to you about investing, becoming wealthy, having a budget, getting out of debt, all of those kind of things to help you live a beautiful and bright future. Thanks so much for stopping by. Bye for now.